Good morning, day traders, and welcome to Market Minute, a hedge fund trader's stock market rundown proudly presented by DTRtrading.com. Let's get after it. The sell-off in global sovereign bond markets continues with the 10-year yield reaching 1.95 this morning. Yields are rapidly rising on central bank hawkishness and the expectation of a rate hike in March. The SPY consolidated yesterday with a thin volume inside bar. Thin volume inside bars generally warn us that one side is given up, but is unclear which side that is. I still think bulls can remain in control, but are weak under 443.50 towards that 440 area. I become bullish above 453 towards 454 and then the 460 zone. SPY could be in the early stages of forming a bull flag, but markets still feel like a coin flip until we get a break or breakout from this range. QQQ is showing signs of relative weakness with a more bearish than neutral daily inside bar candle. Rising yield should continue to apply pressure on tech, and if QQQ can break under 351.50, it has room towards 350 and then 345. The bull case begins above 362.20 towards 365. It is easier to be bearish than bullish because of Friday's volume combo, and I don't think we're going to be able to get moves on QQQ because it'll simply be overextended by the time it breaks out. Apple continues to consolidate with this multi-day range and now looks firmly range bound. I have a slightly bullish bias after Apple made higher lows yesterday on thinning volume. It still has to break under 169.50 for a move towards 165. The bull case begins above 176 towards 180, but just like QQQ, traders need to be careful to not chase overextended moves if it breaks out today. Tesla looks weak after yesterday's failed breakout on thin volume and is showing some weakness here this morning. I start looking for puts under 900, but I think the most likely setup will be under this 880 area, and I believe it has room down towards 850. I become bullish above 950 on this ascending wedge breakout with room, and I think it has space towards that 1000 area with a strong candle volume combo. Microsoft continues to look like a bear flag, and we now need to see that pattern to start playing out. The longer it takes to break down, the less likely the bear flag becomes. Things get really interesting under 299.65 towards that 290 area. There is some evidence of dip buyers defending Microsoft along the way, and I would expect resistance at the 290, right, or along the way towards that 290 area. It's hard to be bullish until 309 breaks on volume and invalidates Thursday's bearish price action. So that's how I plan on dominating today's price action. If you like this video, please like and subscribe. If you want to copy Hedge Fund Trades Live, you can start your free 7-day trial at DTRtrading.com. Otherwise, I'll see you all tomorrow for the next Market Minute.